Good morning, everyone. How's everybody doing today? Do-do-do-do. Great, cool, awesome. Morning, morning, morning. So, kind of going through some things here. The one thing that we're at the beginning of February here, and what you're seeing on your screen is one thing that I kind of keep track of a little bit. In the top left, we have a something that kind of keeps track of some numbers for us. First of all, you'll notice it says month open there, and then it says last price. Then you'll see an FTD, which is the first 3 days of the month. And that's the highest high of the first 3 days of the month, and that's the lowest low of the first 3 days of the month. And what I'm talking about, if you're not seeing it, is just right up here at the very top, right there. So this is basically grabbing the first 3 days of the month's highest high and lowest low. And this is your week start high, week start low, which our week start this week is what? Monday, right? And we can't use Monday all the time because we have a lot of holidays on Monday, so we just call it a week start. And so what you're seeing here, and this is kind of let me clear out my trash here. There we go. So what you're seeing here at the very top, you got the index futures, and that's the S&P, the NASDAQ, the Dow, and the Russell. And just below there, you have the SPY, QQQ, DIA, and IWM. You'll notice right here, it's red on the futures, but it's actually green below it on the indexes or the ETFs. And the only reason for that is if you're not real familiar with futures, if you look at our first trading day of the month, which was basically Monday, right? Well, futures actually open up on Sunday night. So when it grabs the open on the futures, it's from basically 6 p.m. Eastern time on Sunday, where the SPY, QQQ, DIA, IWM, that's basically an equity. And what happens? There we go. It opens up what at 8:30 in the morning, right? So there's basically 15 and a half hours between the open of the futures and the open of the equities. So you're seeing a little bit difference there just because of that. So based off of the equity open, the ETFs are actually being more positive, but the futures look a little more negative. And what'll happen is if we can get above this 6092 here on the S&P, the very top one, it'll actually start turning green. See, now it just went yellow. Now if we get above 6092, actually pop back down. But if we get back above that 6092, it'll turn that row green. So it lets us know, there it goes. So it lets us know if something is trading above the first 3 days highest highs and the first 3 days lowest lows, and if we're above the month open. So when you have basically six of these things all green or six of them all red, you'll see crude oil down here. It's got a lot of red on it, right? And it's not below its first 3 days lowest low yet because it's trading at 71.38 and that low is at 70.67. But if it breaks below there, it puts crude oil on the negative side of things. And it's kind of nice to kind of watch this at kind of in the first couple of weeks of the month just to see if the trends are holding up. Usually when we break the first 3 days highs or break the first 3 days lows, that trend usually will continue for a while. And even if we've seen the index is kind of pull back a little bit today. I mean, if you look at this horizontal blue line on these charts, except for the NASDAQ, and the DAX down here. Everything else is kind of below those horizontal blue lines is basically where we started out at 9:30 Eastern. So I just kind of like watching to see how the market trades based off that first 3 days highest high, and of course on the Monday's high and low. So, and one thing is also interesting, I kind of showed everybody this on Tuesday. Dang it. Lost my chart. There we go. If you just kind of look at how the S&P has been trading really for the past 3 months, from really the election, just put it that way, it's really just been chewing and chopping. I mean, it just can't seem to find a direction. Yeah, it goes up, then it comes back down, goes back up, down, up, down, up, down, up, down, up, down. But net is just kind of nowhere. So until they really take out that high up there, or take out these little lows down in here, it's really not telling us much of anything. But on a shorter term basis, when we look at this first 3 days here, we're being actually trying to be a little more positive than negative. And so, I mean, put a gun to your head and buy something, short something. It's probably easier to buy something than it is to short something, just because the indexes are more positive, right? Now, not everything is going to be that way. Yeah. You're going to see things that, try to correct themselves, pull back. If you look at some stocks are below their month open, heck, they're below their year opens. And kind of trying to head lower. If you look at other things, they're being very, very, very positive. So it all depends on what area of the market you're looking in. So you can actually put different sectors in here, if you will, and you can kind of test them out as well and actually do it for earnings. It's kind of fun to do it that way. But I have a page in here that I just keep, all the earnings guys in here and stuff like that. And these are the ones that came out either last night or this morning. And you can kind of, I'll just blow this thing up. There we go. It'll populate in. There we go. But you can see some stocks like Ford here, and that's Aflac and Hallex or whatever it's called. Honeywell, KKR, Advanced APD, Air Products. That's what that is. And this is BDX. You can see some of them are real negative, but some of them are real positive. Like, Hilton here. Hilton's just taken off. I mean, it opened up at 251. It's up here at 272. It's up $20 on the month. Yeah, so, but they had pretty good earnings this morning, and kind of taken off a little bit. So, and there's Kellanova, which used to be Kellogg. It looks pretty good here as well, but you can just kind of throw these things in here and kind of gives you a good idea of, based off their earnings, if they're being more positive or more negative. And it's a neat little feature to just kind of keep an eye on. And that's what I like to do, is just kind of keep an eye on things and seeing how positive or negative they've been. Another thing that we've had here, and we'll just go over to here and just open up a chart. This is a good old gold. And you can see it's been a nice little uptrend. But this is one thing that gold has a problem with, and I kind of expected this today. Yesterday, we went up to 2,900. We actually hit 2,906. And so now they've been backing off here, and they pulled back about $50 off those highs, and then they're trying to bounce back up a little bit. But every time it hits one of those century marks, it has a big tendency of just kind of yanking back some and then kind of correcting a little bit and then pulling back forward again. So today is probably a little bit of correction day after hitting 2,900. And it wouldn't surprise me that we don't see this again on, tomorrow and everything like that, before they kind of pick up steam and try to start moving back up again. So, but sometimes that correction will last, a couple, 3 days, and then it'll flip back around and take off. You can kind of see here when they hit this 2,800, they jumped up and they hit it and they yanked back again. And then they tried to come up, and took them about 3 days, and finally they busted back above 2,800, and then they took off. So, and it just has a tendency of doing that with every century mark. And I don't know, people taking profit or whatever it may be, but we might have a couple, 3 days here of consolidation, and then they kind of take off again. So, and so when we start looking at, the trending gold, it's very, very positive. It wants to go higher. Even silver's been trying to break above $33. And if you look at it real quickly, there we go. It came up and tried to break through $33 here. And you can kind of see over here, it kind of touched it and it kind of hit it again. So it's having a hard time with $33. And if you can ever get above that 33 and close above it, it'll probably get more strength, and you'll see probably gold and silver kind of take off a little bit. So, but right now they're kind of hitting some resistance areas, natural resistance areas. And so if you're in gold or if you're in silver, something like that, don't worry about the pullback. It's just something that's totally normal, and that's just how the traders do it. I don't know why they do it that way, but they just have a tendency of doing it that way. But I think gold is, poised to move a whole lot higher, with everything that's just kind of going on right now. There's too much to keep up with, right now. Even the news stations can't keep up with everything. So it's just going to be that way probably for the next, month or so before anything kind of chills out a little bit and see what happens as things kind of run through the markets. We also have tomorrow non-farm payrolls, which we've already had the ADP come out yesterday. We had the JOLTS come out the day before. We had jobless claims this morning, which kind of jumped up a little bit. One thing I'll be interested in, if you haven't looked at it, and let me just kind of pull things over here a little bit. This is investing.com. Ta-da. There it is. And this is their economic news. If you go to tomorrow here's going to be your non-farm payrolls. And let me get my little thing here. And where's my little draw tool? There it is. So one thing that you'll see right here, this is one I kind of been watching right there. This is government payrolls, and this all goes into non-farm payroll. So this number right here is going to be the number of manufacturing, government, and the non-farm payroll. So all of this gets all clumped into just what non-farm payrolls is. But then they start breaking it down to different types of areas and stuff like that. They have manufacturing and government in here. But you'll notice that right there, that's 33,000 of that 169,000. So, which tells you what? That, well, actually, it was of this 256 right there. That's 33,000 of that. So the rest of it was either, manufacturing or private payrolls or whatever it is. This number right here has been very, very positive a lot. I mean, between 25 and 45,000 a month going into the government. So, and the question is now, does that start getting negatives, right? I mean, that's what they're trying to do is, clean out the government right now, it sounds to me like. So it'd be interesting to see if that's negative and how much that hurts this non-farm payroll number. And so it'd be something interesting to kind of look at tomorrow to see if they've actually been getting rid of government employees, and if the private sector is actually creating jobs and the government sector is actually decreasing and going from there. So it ought to be kind of an interesting report tomorrow. And if not this month, then definitely next month, right? So, but, and that's the one thing that I want to kind of see is, what's the government payrolls like going into tomorrow? Because they've been really positive. If you look at, get back to here, you can actually click on that. Ta-da. There we go. And it gives you this little chart. But you notice it's just been positive here. Just, they really haven't let anybody go. And this is since 2022. And it's just been up and up and up and up and up. They just keep hiring and keep hiring and keep hiring in there. And right here, there's a kind of this is the changeover. My goodness, that little box is driving me nuts. That's your changeover from the election going into the new administration. So they got rid of some, they put in some and all that good stuff. So, but for the most part, it was just a lot of hiring in government. So now that the question is there going to be these little lines to the downside for a good while? And we'll find out, I guess, starting tomorrow. But I think that's going to be probably the biggest driver tomorrow. We do have some earnings. We got Amazon coming out tonight, right? So whatever Amazon's going to be doing, plus whoever else is coming out through here. You've got some tomorrow, but nothing real big tomorrow. The CBOE and Road and FLO. And we have Take-Two, Fortinet, probably going to be your bigger ones, but I can keep a list of earnings over here on my wall as well as looking at. But anyway, you just kind of keep your eye on that just to kind of see what it does. Now the market's going to react to whatever this thing's done. And one thing you have to be aware of is the reaction that you see when the news comes out in the morning isn't necessarily the reaction that you're going to see after the opening bell. All right. So they might sell it off or whatever, or they might rally it big time, whatever it may be. There are times that it will continue that trend after the opening bell, but there are times that they will reverse that thing and just turn it around and go the other direction. So just you can watch it there at the news times, so what the index futures are doing and jacking around, or you can even watch the SPY, QQQ, IWM, and all that stuff. They'll be moving at that time. And then once we get past the opening bell, then the real world, if you will, quote unquote, gets to kind of put their opinion on it. It's when all the equities open up and do they like it, do they dislike it, whatever it may be. So you're going to have kind of a violent reaction probably after the 8:30 open for about 5 or 10 minutes, and they're just going to have to figure out what they want to do with the rest of the day. Plus, they're also going to be doing what? Thinking about what Amazon said and did and all that good stuff. So basically a huge retailer, largest online retailer anyway, right? I think Walmart's still the biggest retailer, something like that anyway. But anyway, they're going to be wanting to see what they do. And I think the best thing to do is just kind of let the news come out, let it chop around a little bit after the open, and then we'll start seeing what it's doing. So, but that's really kind of what I'm looking at right now and just seeing if the trends can kind of hold up a little bit. NASDAQ seemed to be a little more positive today than the other markets. You got the Russell down a little bit, got the Dow down a little bit. And S&P is trying to be positive from where we opened up in the opening bell this morning. That's what that horizontal blue line is. So we'll just kind of see how it goes from there. But if you have any questions, let me know. And if not, then we'll kind of wrap things up here. If you stay in this room, be going through a basically my bear market prediction and everything like that here in about 45 minutes. So if you want to hang out in the room, maybe grab a little something to eat or whatever it is, and then come on back. We'll be back in here in this room if you want to hang out. So, and another thing, and the lady already will pop this in here, but if you want to kind of follow what I'm doing and everything like that, you can click on that. It kind of gives you all that information, and we will see how things kind of pan out from there. But I think gold right now, I'd like to see it, kind of consolidate between this 2850 and 2900 for a couple of days, and then it should then start kind of perking back up and taking back off. But like I said, it's not unusual to see it pull back once it hits one of those century marks. Last time when we hit 2800, as I stated, took about 3 days before they popped back up again. So kind of keep your eye on that. So, but you all have a great and wonderful day, and we'll be back Tuesday next week and see where things are at.